The Fed still, as Chairman Powell kept saying today, is obsessed on the idea that tariffs are going to cause inflation, but they've been saying that really since January, and it keeps not happening. If an independent Federal Reserve is data-driven and looking at the data, that our expectation is that they're going to recognize what the ECB has already recognized, that it's okay, it's safe now to cut rates.
Well, to no one's surprise, Jerome Powell is refusing to cut interest rates. But the White House isn't the only one putting pressure on the Fed chair. There's an internal split at the Federal Reserve, and it's making history. Two Fed officials, Christopher Waller and Michelle Bowman, they broke ranks. They voted to cut rates yesterday. It's the first double dissent favoring rate cuts since 1993. So we don't quite have a united front here, David, but Hassett makes a valid point, which is if you're looking at the data, and that's inflation and labor, there is a case to cut rates. They didn't do it yesterday. September may be on the table, but Powell said we haven't made a decision just yet. So he's really he's holding it close.
I believe he will cut in September. I believe they should have already cut by now, and I don't agree with all the reasons that are being said. And the conversation gets difficult when people start saying we should be at a 1% Fed funds rate. Oh, and it's the greatest economy we've ever had. 1% is what you have in a hyper recession. So I believe that they're too tight, that it is hurting mortgage rates, that there's lagging issues that are going to end up hurting the economy if they don't get in front of it.
Wait a minute. The last time you were here, you said that the Fed had no control over mortgage rates. And now you're saying it's important?
Yeah, no. What I said before was that the Fed can't control mortgage rates. So what Powell said yesterday was actually one of his few good answers. The Fed obviously doesn't control mortgage rates. The Fed controls an overnight lending rate, but that serves as a reference rate to other borrowing. So this is a really important thing for people to understand. The 10-year and the 30-year are much more important for mortgage rates.
I know, but listen, two things. Number one, I don't know how he does it, but Hassett smiles when he speaks.
Yeah.
I've never been able to.
Superpower.
Trump likes that about him. That he smiles.
I'm going to try to do this,
Charlie.
I'm going to try to give my answer with a smile.
That's your next Federal Reserve
How do these guys do this? Smile when
Maybe
they speak.
he's just a happy person.
I don't know. It was a little off-putting, but so.
Why is that off-putting?
It's just weird.
Smiling.
We should all
weird?
scowl like you.
Yes.
I don't know. Maybe it's not weird. Madami, our next.
He's a smiler.
He's a smiler when he speaks. But if you lower rates now, if the economy is expanding, you lower rates, don't you necessarily gap out the 10 and the 30? I mean, in the past, that's what happened. When last time Powell cut in the middle of expansion, this was during the campaign. You remember it was around September.
December.
December.
And then he cut twice after the election.
And it's still, it capped out the 10. And I mean, if you're worried about the 10 and 30, we had spikes on the yield. So I think, at this point, it's really hard to say that you're going to get lower 10 and 30-year rates, which all the consumer rates are priced off of, if you lower the Fed funds rate. Now, if you see, unless
that'll absolutely happen.
Donald Trump and Bessent think that his tariffs are going to start dragging the economy down, and that's why they're freaking out. Unless they think, well, you know what, we have to keep rolling over short-term debt. I'm sorry to go there.
I knew you were going to do it.
And we need to save money, so we need this lower, and
Well, they're saying that that's their new strategy.
Well, then maybe that's the reason, and it's not economic.
Well, it may not be economic, but the reality in financial markets is they have $1 trillion of commercial real estate debt that rolls over. They have $1 trillion of floating rate small business debt that rolls over. So they're trying to get in front of it. And they have to talk about all the normal rules-based indicators, but it isn't true. My view on the 10-year is it not only should be, but will be what nominal GDP ends up being over 10 years. So if you believe inflation will be about 2 and real growth will be about 2, then you ought to have a 10-year about 4. Right now, we're closer to 4.4. So there's room for that to come down. You don't want the 10-year dropping to 2.5%. That is assuming that we're going to get no growth for 10 years. So that's where I think a lot of people need to be careful what they're wishing for.
So what it sounds like you're saying to me is that it's a very, very delicate balance. It's almost like doing a little bit of a dance.
So
but
what does
still,
Powell think? What does Powell think?
Powell has room on that argument. A little room. I'm not saying he needs to cut 300 basis points.
Oh, right.
Right?
You should not be cutting 300 basis points.
But look, let's just talk about what's actually being proposed. By the way, I'm paying attention to the fact that you're recording every comment for the future.
Yeah, you're going to hold this against us?
No, we talked about it last
Bowman
time.
and
You're like a cop that's saying whatever you say can and you be used.
That's right. That's why she's sitting next to you, Charlie. Bowman and Waller voted for a quarter-point cut. Okay, they weren't talking 2 or 3
Right. Yeah.
points.
Right.
They were saying, and I agree with you, David, there are good economic reasons for that and there are not good. And the best one, and really the only one for me, is where's inflation? And in the GDP report, we saw PCE come in. You can choose core, you can choose headline, 2.1, 2.5. That looks like territory where a 1/4 point cut is totally warranted. So forget about what the president is calling for. Just start
Brian,
with a 1/4, Charlie, and see what happens to your 10 years.
Well, I just want to know, what is Powell's rationale? I mean, I know I mean, I'm not a big fan of his, but he's not a complete imbecile. What is
saying
his?
tariffs cause inflation,
Charlie,
what is his?
right?
What is his rationale?
Can I give you? I'll
I'll
give you
answer.
3. I'll give you 3.
I want the.
I'll go
but-
answer.
no,
and
no.
I'll let Jerry remember my answer.
Inflation, jobs,
No.
and under the hood GDP report. I
That's
think
not
there's
his real
3
rationale.
good reasons.
Okay, what's his
The
rationale?
real rationale is that he believes the same thing the 2 dissenters believe and the same thing we're talking about on set, but he doesn't believe he should appear on the global stage as giving in to the president, so he's going to give the president what he wants 1 month later. That's what's really happening.
So-
Everyone is saying, by the way, that there's the first time we've had
That's
dissent.
silly.
You know, Chairman Powell dissented against Bernanke on QE3.
I remember that.
And we've had 2 dissenters before about rate hikes, but this was different because it's rate cuts. So-
1993.
Well,
Alan Greenspan.
Where you had 2
No,
governors.
that was 2 dissenters on cuts in
Right.
'93. But in 2013, Powell dissented on doing QE3. So we've had dissent before, including with this chairman on the other side of it.
Yeah.
But I think that he is dealing with the reality of he feels that there's an institutional credibility. I disagree with him, but I don't have any doubt that he genuinely believes if he looks like he's giving in to a president who's jawboning him, it would be bad.
I think that's right. And I'll just
By the way,
add to
that's-
it and
that's
say,
scary to play
but
with
he
that,
has
don't you?
dug himself into this
I
position.
agree. I
And
agree.
he's played politics before for the other side, but hasn't been scared to have it look or appear that way. He dug himself into this position to push back against Trump, so he couldn't give the cut yesterday, and now we have to wait for it. At the end of the day, I look at it like a boat steering wheel, right? If you want to go right, you're not just going to jerk the steering wheel really hard to go right. You got to move it a little slowly. He could give that 1/4 point. He could give another 1/4 point a little bit later. And then if all of a sudden his inflation and tariff theory, the inflation happens to pop because of tariffs for some reason, he can dial it back.
But
It
you know
doesn't
what else
all
he
have
could've-
to be static.
But Jackie, the other thing he could have done yesterday is what I thought he was going to do, is not even give the 1/4 point cut and just basically tell the camera he was giving it next
do
time.
it next time,
They've been
right.
doing forward guidance since Greenspan, and President Trump would have been totally content with that, but he had to just get the little dig
By
in
the way,
about
he
we don't
is-
know what we're doing.
Well, he's
Can't
got
help
he's
himself.
got 2 months to do it. So yesterday he had to be tough guy.
He is playing with
Let's
fire.
see what happens.
He
the
is
next
playing with
2
fire.
months.
If you believe, I mean, on the scale, right, that we have a greater chance of falling into, slower economic growth as opposed to inflation because of these tariffs, this guy's playing with fire by not cutting it a 1/4 point, don't
Yeah.
you think?
I agree.
I think that's the risk. That's the real
Scary.
risk here,
Yeah.
actually, is
Yeah.
dumping us into a recession.
All right.